Hi, and welcome to the Stock Scores Market Minutes for November 28th, 2016. This week, discussing how fear keeps you out of the game, plus my regular weekly market analysis, and then trade of the week on OPXA. We are constantly inundated with fear-based analysis of the markets. We see it over and over again, all of the reasons why the market is about to endure a massive correction. In reality, disasters rarely happen, far less than the fearmongers predict. Rather than listen to the purveyors of fear, simply monitor the markets for signs of a correction. Watch for breaks of upward trends or breaks down through support. And until they happen, stay bullish, stay on the buy side, and enjoy what the market gives you. All right, let's get into this week's market analysis. This is a 30-day, 120-minute chart of the S&P 500, and you can see since the election, great bull run, pretty linear actually, but probably a little oversold, and you can also see that the tops aren't rising as quickly as the bottoms are. That's a rising wedge pattern. What you want to watch for is a breakdown through that line as an indication that we'll get a little correction. Now, in the longer term chart, we've got some room to go. If we think about the upward sloping channel being something like this, we can probably come up into here before we run into some resistance. So, although I think the market is overbought, it's gone up a little too quickly, keep in mind that for a long time it did nothing, and now it's playing catch up. And so simply stay bullish for now, dance close to the exit door, because the risk, I would say, is high. Looking at the Russell 2000, a real strong move on the Russell over the last 3 weeks following the election results. Again, somewhat overbought. We're at the top of the channel here, and that tells me that we'll probably see a pullback near term, but longer term remains bullish. On the Canadian market, we had a pretty good run up here and then a little bit of a breakdown this past week and going into a bit of a falling top situation. So I want you to be cautious with that. If we break down out of this pennant with the falling top, we could get more profit taking prices down into that zone there. On the longer term chart, still not terrible. We haven't hit our long-term resistance up here, so we do have some upside potential, but it does feel like momentum is slowing as we get up near that horizontal resistance at the all-time highs. TSX Venture really suffering because of the weakness in gold, heavily weighted in the mining sector, but oversold. We're at the bottom of the channel, which means short term wouldn't surprise me at all if we see a little bounce back, but still longer term, I would be bearish on this market. On the Treasury bond market, of course, we've had a terrific sell-off. We're heavily oversold, coming into support. I expect we'll see a bounce back in bonds in the near term, but I don't like them longer term. So near term, you could see a bounce. A little bit of a jump up means a little short-term drop in interest rates, but there's no reason to be a bull for the bond market right now. A lot of the reason we're seeing strength in the weakness in the bond market and weakness in gold, but strength in stocks, is the strength in the US dollar, which has been quite considerable over the last few weeks, but it's coming into that long-term resistance where I expect it will get stuck. So in the next week or two, my expectation is the US dollar stalls its strength and comes back a little bit because it is quite overbought right now. On the gold market, there you see the effect of the strength in the US dollar. We're oversold. How do we know we're oversold? Because we're far away from the trend line. There's the trend line, and this is where we are way down here. That means short term could bounce back, but don't take that as a sign that this market is turning higher. It's simply a bounce back from emotional selling pressure. So you want to remain cautious. Short-term traders can take advantage of that bounce, but longer-term traders should not believe that any strength is the beginning of a bull market in gold again. On the oil market, we've been stuck in a trading range for a number of months, stable in that range. We were at the bottom of the range last week. We bounced off of that, probably get back to the top, but this market is really not going anywhere until it can break out of this range. And so short term, we had a little bounce. That seemed to lose some steam last week. We'll see what happens this coming week. But it's tough to take a longer term trade in this market just based on the trend here being sideways. Now, fear, very low, probably a little too complacent. We could see a little bounce back in fear near term, but as it stands now, no fear in the market. So US stocks bullish on both time frames, but with a good deal of caution because we are overbought. Canadian stocks bullish long term, neutral short term, starting to see a little bit of short term weakness in the Canadian stock market. Gold bearish both time frames, but oversold, due for a bounce. Neutral on oil, just kind of gyrating around with a good deal of uncertainty. Stocks have made a great bounce, but they are oversold, overbought, and due for, let's put bought in there, I wrote that wrong, and due for a pullback. Wait for a sign of weakness, but stay bullish until there is a breakdown. Gold is oversold. It should bounce in the short term, but remains bearish longer term. Oil showing uncertainty in the short term. It's up, it's down, it's all over the place. It's hard to get a read on it. Fear, relatively low right now, and that could be complacency. Now on to the trade of the week. I did this trade on Monday, and you can see a couple of entry signals here. My worm entry here, pullback play entry here. Nice run higher on a risk-reward basis from there. It ended up being about 10 or maybe even 11 to 1. It was a big winner on Monday. Market was pretty good on Tuesday and then went real quiet Wednesday ahead of the US holiday Thursday, and of course the half trading day on Friday. Well, that has been the Stock Scores Market Minutes. Hope you liked it. Please like it by clicking on the like button. Subscribe to the channel, and as always, trade well.